Private Banking Advisory. Happy New Year to all of you, whether you are subscribers or whether you are just popping in to see what this channel is all about. Basically, I want to say that our main purpose is to help investors, small and big ones, sophisticated ones, and those that are not familiar with the financial markets, to achieve the best possible returns for their investments. Let's not forget that Warren Buffett achieved a return on average of about 20 to 22% per annum. And his immense wealth is not the result of making spectacular investment decisions, shooting for the stars, one could say, but it's the consistency. And unfortunately, for most of us, it is very difficult to achieve the long-term performance because we are not going to live forever. And the average person watching this video is probably already in his mid-50s and doesn't have the 60-year span ahead that allowed Warren Buffett to achieve his fantastic performance. As we all know, if you put one seed corn on a chessboard field and you double the amount of seed corns in every field until you're filling the whole chessboard with seed corns, you get an astronomically large amount of seed corns. That's the power of compounding. As somebody once said, it's the eighth wonder of the world. So let's go back to basics. What are the questions that most of you are sending me over the last few weeks? One is, of course, should I pay a lot of attention to the year outlooks, the annual outlooks that are produced by investment managers, stockbrokers, newspapers? I would say take it for its amusement value if you have the time. But unfortunately, it will not really help you to achieve your performance target for this year. The next question I often get asked is, what should my performance have been during the past year? I had performance X or Y percent. Is that a good number? Is that a bad number? Now, of course, you can compare your performance to the S&P 500 in the United States, which was well into double digits. You can also compare it to Bitcoin, which obviously also had a very, very good performance last year. But I would say stay reasonable. Don't expect too much. Remember the number that Warren Buffett achieved. If your performance is anything above 10%, I would be quite happy. If it's below 5%, I would ask questions. The questions to ask are the following. Was there a concentration in a certain asset class, in a certain geography that basically was the main factor behind my performance in the last year? I'm more than happy to have a look for you and give you a neutral opinion based on 50 years experience in the financial markets. So the next questions I often get is how to deal with all these risks that are mentioned in the media, whether it's risk of war, terrorism, political risks. And my answer, as always, is diversification. whether it's diversification by asset class, diversification by geography, also by diversification by asset management companies or fund managers that you use. Don't put all your eggs in one basket. Don't put all your eggs in the basket of one particular fund manager, one particular private bank, but have at least 2 or 3 fund managers that you can compare, and it also keeps them alert if they know that they are not the only provider that you're relying on. So how can I help you in the new year? Let me remind you, I'm not giving investment recommendations. I don't recommend specific shares, funds. I basically help you to monitor the costs associated with managing your money. It shouldn't be way above the 1% mark, including all costs of custody, ancillary fees, etc., etc. Preferably, it should be closer to the 0.5% level, and using passive instruments like ETFs, the average cost could be even below the 0.5% level. I also help you to monitor risks in your portfolio. If there is undue concentration in certain assets, in certain risky assets, I will be able to mention that to you and work it out with your fund manager. And the last one is comparing the performance. I have already mentioned that before. That's also an important aspect, because remember, every percent that you lose in performance in a certain year, it accumulates. After 10 years, you lost 10% of your possible performance. After 20 years, you lost 20%. And if the loss of performance is 2 or 3% a year, you get the magnitude of these losses, and basically your portfolio, your target portfolio, has not evolved very favorably. So again, click on the subscribe button, recommend this channel to your friends where you think it could be useful for them, and don't hesitate to send me any questions, and I will try to answer them, or maybe we can schedule an online consultation for which I charge relatively reasonable fees that are more or less in line with what a quality professional in the medical or legal or accounting field would charge. So again, Happy New Year and see you soon. Bye-bye.